Fate of the much talked about tech trade on the minds of many these days as those stocks, they've struggled mightily this year. The Nasdaq still down 27% with 1 month to go. The big question is, can they stage a rebound into 2023? Let's ask Larry Cordisco. He is Osterweis Capital co-CIO. It's good to see you again. Welcome back.
Thanks, Scott.
Yeah, I mean, it's been a tough go, right? And I felt like, I don't know if you heard the conversation with Brad Gerstner and myself. He was pretty dour on the near term, I think. For technology. What are your thoughts?
Yeah, I get the negative sentiment, and look, it's valid. We saw a big deceleration in tech earnings in the third quarter, especially with the cloud vendors. And I think investors are really grappling with the idea of how much of this is cyclical and how much of it is and how deep is the cycle and how much of it is secular. Are we seeing all of a sudden maybe more competition with the cloud vendors? And frankly, we don't know the answer to those questions right now. But, and I heard your last interviews, I think some of the guests hit on some points that I would emphasize as well, which is not all tech's the same. If you look at the ones that maybe have, or the ones that do have more attractive valuations, long-term secular tailwinds, and possibilities, potential to surprise next year, I mean, there are places to find, I think, opportunities and values. But all that being said, if the economy really does do a hard landing, on an absolute basis, I think there's going to be, challenges across the board.
I mean, Brad spoke of what I feel like is a real sea change, a real big picture view of a tremendous change that is taking place as we speak out in Silicon Valley, and it's going to affect investors like you, where he says Silicon Valley needs to recalibrate towards profitability. In other words, you better be profitable or your stocks are just going to do horribly.
I couldn't agree with that more. And that's one of the reasons when you look at the names that we emphasize in our portfolios, they're all profitable. And in fact, I think one of the big surprises we could see in 2023 is this recognition, even amongst the very large tech companies that already have big margins, like a Google and the like, that they need to do better on their expense management and on their cost structures. This is one of the places we're looking for. In fact, the last time we spoke was when Google reported they didn't do well. And one of the things that investors really zeroed in on was the margin pressure with that company. It wasn't so much that the top line was weak. It was, and that's partly the economy, or it's a big part of it's the economy. But it's the fact that there was such negative drop down onto the margins that is absolutely a place that people are focused on. And you're seeing Amazon talking about cost cutting with its Alexa unit. You've obviously seen Facebook respond very well, or Meta respond very well to its cost actions. I think it's resonating in Silicon Valley. Now, those are companies that can manage costs, already have margins. So if you're talking about the higher growth, low margin, no profit, low profit companies, I agree. I think you're going to continue to see a lot of challenges with those business models because they have to reinvest to grow.
Yeah. And to be frank, I mean, I think we're talking about all the companies and not just those. Those are just the most egregious of the story. But we are going to be talking about everybody, no matter, how prestigious your ticker symbol is. There's a new sheriff in town, right? And that's just the way it is. Larry, I appreciate your time. We'll talk to you again soon. That's Larry Cordisco joining us.